Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me, as always, it's Nehi Shah. And this is the show where we take you through all the stocks that are buzzing in trade, either on the back of news flow or on the back of technical charts. But first up, let's see where the markets are at. Well, there's a fall of 159 points on the Nifty from the day's high. In fact, Snehi, it is barely managing to hold on to those 550 levels, because that's where the resistance is coming at. But the one pocket that's really surprising us is the FMCG pack today.
Absolutely, surprisingly today FMCG is outperforming the entire market. It's amid a market like this, FMCG is 1% higher. But let's take a look at what the benchmarks are up to right now. At the day's lowest point, you have Nifty, Sensex, Nifty mid-cap, small-cap. In fact, the entire market right now is at the day's lowest point. Doesn't look like we are headed for a recovery anytime soon. But, well, that's what the market is looking like right now. You have cuts coming in, a 1% cut coming in on the small-cap index as well. Mid-cap also trading lower by 1%. You have Sensex that's lower by 0.7% in tandem with what the Nifty is also doing. So, largely, that's what the market breadth is looking. Very quickly, FMCG, your top sectoral gainer, Marico, Colgate, Godrej, HUL, all of them trading with gains of around 2.5%. Followed by auto. These are your only two sectors that are in the green right now. Leading the losses on the flip side are realty, energy, metal, PSU bank. You have IT, Nifty banks, media and pharma in that pecking order from most to least losers in today's trade. So that's what the market is shaping up to be like, and looking rather somber for us at this point.
Absolutely. And moving on, then we've got Ashish Kyal, founder and CEO of Base Strategy Advisors, who's joining us now on the technicals. And from our research team, we're joined by Gaurav. Hi, good afternoon to both of you. Thank you so much for joining us. Let's kickstart with all the buzzers in trade today. Then first up is Tata Motors, that is in focus today on the back of its operational updates. JLR has reported some strong wholesales growth. In quarter three, wholesales in quarter three were up 1.04 lakh units, which is up 3% on a year-on-year basis and 20% on a sequential basis. The wholesale volumes for JLR's three best-selling models, has been up 22% for Range Rover on a year-on-year basis. For Range Rover Sports, it has been up 17%, and for Defender model, it has been up 13% on a year-on-year basis. The retail sales in quarter 3 FY25 were 1.06 lakhs, which is down 3%, which is seeing a bit of a downtick of 3% on a year-on-year basis. But nonetheless, it is up on a sequential basis of 3%. The overall mix for the most profitable Range Rover Sports and Defender models increased to 70% of the total wholesale volumes versus a 67% in quarter 2. Also, the demand for Range Rover was strong, with wholesale volumes up 48% on a sequential basis. So strong set of numbers coming in for Tata Motors. It did open up in the green. It was, but it has succumbed to selling pressure. Is now trading down 1.5%.
Okay, so Tata Motors in pressure right now, despite the news flow being rather positive. 1.6% lower is where the stock is at. Ashish, let's come to you. Good afternoon and thanks for joining us on the show. Let's keep it going with the auto pack, because you've picked out M&M for us. Now, Mahindra & Mahindra, we've been reading across brokerages, is emerging as the top pick. You have analysts that are liking this. Last year, 2024, has been a stellar year for M&M on the charts. Tell us what's the outlook going ahead, and do you believe that the dream run that the stock has seen so far could continue?
Hi, afternoon to you and all the viewers. If you look at M&M, I think the stock has outperformed compared to other auto stocks where there have been selling pressure, but M&M has bucked the trend, and it is even today moving on the upside and by nearly 2%. The overall trend for the stock is positive. We can expect it to reach towards the upper end of the range, which is around 3250 levels, which is the previous resistance level. That can be the target. And on the downside, I think the low which is formed in today's session around 3080 can be an immediate support.
Okay, so those are the levels to watch out for on M&M. Let's talk about the chemical stocks. That's one place that's a buzz today. The likes of SRF, you have Navin Fluorine. Both of these stocks are seeing double-digit gains and up and away in today's trading session. In fact, Navin Fluorine has simmered down slightly, but nonetheless almost a 10% gain coming in on Navin Fluorine as well. SRF holding up by 13%. Now, shares of these specialty chemical players, both SRF and Navin Fluorine, have zoomed following reports of a hike in prices of refrigerant gases in the US. With gains in today's session, both the stocks have extended their up move to the third day in a row, and according to reports, the US gas distributors have raised prices for refrigerant gases, with iGas USA stating that the supply of R32 and R125 gases has been affected, leading to a rise in price by up to 200%. So that's a massive spike coming in. Equity Securities said that the US dollar $1 per kg change in R32 realization could raise SRF's EBITDA by 260 60 crore rupees. So that's a massive change coming in. On Navin Fluorine, the brokerage said that R32 price hikes by $1 per kg can increase the EBITDA by 77 crore. The brokerage also said that SRF has a capacity of 29 to 30,000 tons of R32, and Navin Fluorine International has 4.5 tons of R32 and expects to add another 4.5 tons by February of this year. SRF also has a 7,000 ton capacity of R25 it has added. Lastly, we also have UBS that's weighing in on this sharp spike on the stock, and they say on Navin Fluorine they've maintained a buy rating, price target of 4,250 rupees, and they also say that the new plant could generate 600 crores in revenue at peak utilization and near-term revenue of 300 crores. Looking very good. Both brokerage notes, Equirus as well as UBS, looking very upbeat on these stocks, and both of these stocks are soaring away rather in today's trade.
Alright, moving on from those chemical names that are soaring away. In trade to Hindalco, Gaurav, you picked out Hindalco for us. Novelis has come out with its business operational updates. Tell us, what do they look like?
When we talk about Hindalco, we are seeing some kind of weakness coming up in the stock price, and the reason being that Novelis came up with their Q3 updates. Let's first look at the numbers, how the numbers were. When we talk about shipments, those were flat on a year-on-year basis, while they declined almost by 4% on a sequential basis. Now, what the company has said that higher beverages packaging shipment offsets lower automotive, and that is the reason why we are seeing these numbers. At the same time, when we talk about adjusted EBITDA, now it stands somewhere around 360 to 370 million, which is down almost by 20% on a year-on-year basis. In fact, when we talk about sequential number also, that is down 21%. Now, adjusted EBITDA fall was attributed to around scrap price increase and at the same time unfavorable product mix. At the same time, when we talk about Q4, management being a little positive, what they're saying is that Q4 volumes will improve and at the same time product mix will be favorable. But on the back of the weak set of numbers, we are seeing some kind of pressure coming up in Hindalco, and that is the reason why we are seeing the stock is down 0.3% right now.
So weak Q3 for Novelis. Outlook seems to be positive, but nonetheless the stock is not taking it very well in today's trade. But nonetheless, on that note, we'll slip into a short break on this edition of Market Fatafat, and on the other side, we'll keep it going with more stocks that are buzzing away. Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus. And Ashish, give us a tech check on what Ujjivan Small Finance Bank, that chart is looking like. If I pull up the charts, last 6 months the stock has been deeply under pressure. Last 3 months also has given negative returns. Do you believe that this consolidation that the stock has seen recently will continue for some more time, or time now for a reversal on the chart?
Hi, if you look at Ujjivan Small Finance Bank, I think there is a possibility of reversal because after a long time, the stock has managed to form a higher low and a higher high, which is suggesting that the trend can possibly reverse. Also, it is managing to break the upper end of the Bollinger Band, which is suggesting on the daily time frame chart. If it manages to close back about the levels of around 36.30, then the up move can resume from here and we can expect a target of 40 rupees. So the overall trend looks like bottoming out to me as of now. And about 36.30 we can aim for 40 rupees, and on the downside the important support for the stock is placed at 34.70.
Alright, that's Ujjivan Small Finance Bank on the charts. But moving on to another count, Big Boy Reliance, that's in focus today on the back of that Morgan Stanley note, in which they are maintaining an overweight on the counter with a target price of 1,662 rupees. Now they see that the valuations are undemanding, and as far as the refining business is concerned, the engine for RIL's FCF generation is turning up with global capacity. Now they also add that almost half of the demand growth in 2025, with further tightness seen through 2027. The retail profitability should improve in FY26 with rationalization of store footprints. The new energy, while being used internally, remains highly underappreciated, and this should improve profitability of the oil and chemicals vertical in 2025. And on the back of that, they're maintaining an overweight on Reliance. On the back of that, Reliance is in focus today, has given up those morning gains completely, is trading towards the day's lowest point now, reeling under selling pressure with cuts of 1.2%.
Okay, so bullish brokerage note, but the stock giving into the market pressure, more than a percent cut coming in on Big Boy Reliance right now. Ashish, coming to you, you've picked out RCF from the fertilizer space. Tell us what's the outlook on this one, because last 6 months also the stock has not done anything. In fact, it's lower by 20-25 odd percent. 3 months also rather flattish moves coming in. What's the view going ahead and better days? Is that something that you're penciling on the charts for this one?
Yes, if you look at RCF, I think it formed a double bottom around 148, 149 levels from where it bounced back sharply and is now consolidating over past 2 weeks. But if you look at the chart, it is forming a classic inverted head and shoulder bottoming pattern with a neckline around 182 levels. So it looks like there is a very high probability the stock can give a positive breakout. The risk reward looks appealing and we can then head towards the target of around 220. This stock has underperformed, but right now it is showing signs of accumulation for the targets of 220, which is the target as per the head. And on the downside, the important support for the stock is placed at 168 levels.
All right, with that, it's time for a quick breather. You don't go anywhere after the break. We're getting you some more buzzers on the other side, so stay tuned.
If you like this video, then like, share and subscribe to ET Now.